Greetings, market rebels. Welcome to this week's Sector Situation. I'm Wayne, and it is not Sunday, April 21st, 2024, but rather Friday, April 19th, 2024. And we're about 20 minutes in front of the close here on the East Coast. But I've got to get things rolling because I've got a really jam-packed, action-packed weekend that I've got a lot of stuff to take care of. And so I've got to record here, and this might become a thing of the future. Intellectual property rights notice after flashing our trusty disclaimer. Here's the macro measure, brief slide of the week. And we've been talking about this for a long time, and we've talked about it this week again, and we talked about it in some webinars. And I think I'm just going to try to completely cut this thing down because it's not my style, but it doesn't seem like a lot of people are willing to invest the time. We're trying to help, trying to help more people. I don't like leaving details out. I can't possibly include every detail in everything I do, but there's no staff or anything like that to make sure I get them all. But I try to do the best I can, sort of off the cuff or in the heat of the moment, to try to include a lot of things that come to mind. But yeah, it ends up taking a while, and so therefore I'm going to move on already, but that's the idea. Just try to move on, maybe just pick out some salient points, and not maybe I don't intend to really teach as much. I try to teach by sharing just stuff from my own experience that I've think the market's taught me in all the years I've been involved in charting it and trading it. So but that might just go by the wayside, and maybe we'll find a little bit more of a streamlined version that helps more people, I guess would be one way to put it. So on that note, let me just briefly stop the share. And that's all the stuff flashed up there for a while on what we talked about in macro measure. And I'm sure a lot of you will recall that last week let's get back to our charts. Last week, we spent a lot of time talking about retracements in both macro measure and also in the sector situation video. And I guess it turned out to be a good thing that we did because of this week's action. Like I said in the notes, I think we could see that there was the potential for this kind of a break finally that was coming. And we even mentioned things like gaps, which is highlighted by this white oval here as we look at SMH. And the reason we highlighted those was because we thought there's a chance it could be returning to that. So if you haven't heard me say this before, after about 5 days of trading, right, on a daily chart, we just kind of give up on the gap. In other words, like it's not really part of our calculus anymore. It's sort of like at that point, what we found is that the markets ignored it for 5 days afterwards. And so it doesn't seem to hold any particular weight at the moment. And at some point in the future, it could again. And I like to see it exactly the way we saw it here, where if you do anticipate that there could be a breakdown, and then there's a real gap, say, between these different levels, right, from where you broke down on the one fib to maybe the next fib lower, from the 23.6 to the 38.2 in this case, there's a gap near there as well. And you've got a support line coming in there, and you've got from way back when this white support line, plus you've got the white dash 100 SMA. It all makes sense, really, in some odd way to factor the gap in and all the rest of it, call it confluence of different factors, and assume, right, that there's a good chance, not that it will get exactly to there, but work its way towards it. And then I would always, as I'm trading, I'd always shave a little off, right? So if I were really patient and waited for a breakdown, just did a couple rolls, and I got this close with 20 minutes to go on Friday to an area that's important, knowing that the weekend could bring news, it could bring whatever, I would probably do another roll, right? I'd probably do more of an overroll, or at least roll to the at the monies at this point. It's been a pretty big breakdown. The gap has not been closed exactly. It would really be dovetailing up with all the things we've already talked about to close, but you're really moving beyond the 38.2 retracement. Naturally, that should take you really probably towards the 50. So there probably is more to come here. But at the same time, we can't say that they won't throw a little bit of a wrinkle in, put a little rally together, and see, and then from there, maybe roll over and fail again, maybe, right? So it's a tough call, but I think you're close enough. And I would always shave a little bit off anyway. So I would make my position adjustments. The market's had a lot of amnesia recently. I would say the last year, mainly the last 6 months, in terms of if a Friday wasn't that great, it seemed like that didn't carry over that much. It used to be way back when that a rough Friday usually brought a pretty rough Monday, at least to start, but that hasn't been the case. I don't know. Of late would be one way to put it, but you're pretty close to the gap fill. Again, we factor those back in when we think there's a chance they're going to return to them, not when, right, they're just laying out there, and we don't become really gap obsessive after 5 days. It just matters when we foresee a scenario that would maybe bring that about. And that sort of happened here to a degree where that mattered in SMH. Remember, this is the leadership, which is why I'm in my mind anyway, that I've been started out focusing on it rather than our grid of 12. There are other gaps in here as well. There's one, I think, back in here. There's another one way back in here. So there's another one way back in here you can probably see all the way to the left. So there's a lot of gaps, right? And that's not a good thing, right? If we start to really see the wheels come off of the economy. And the good side of that would be, though, if wheels start coming off, then maybe the probabilities start shifting, and maybe that does make rate cuts, significant rate cuts sooner, more likely. So in other words, if the market really gets damaged and it's because there's news that's finally emerging or being allowed to emerge would be another way to put it. That might really, as I said in last week's videos, that might really aid the rates lower sooner gang, where they have a legitimate call for it, right? Whereas, right, the way they've been portraying it, it's been a great economy, everything's great, but we still need the rate cuts, even though inflation hasn't really completely retreated. And they again try to have it all ways, and sometimes they do get to have it all ways, but that it was kind of a dichotomy that was going on there, I guess would be one way to put it. Here's a grid of 12. A lot of things rolled over, as you can see. I'm not going to go into too much depth on this. We did add fib retracements really on virtually all of them last week. What I would note, though, is that defensive things, right, things we would expect to act as a place for money to rotate into, like utilities, like staples, that's actually happened. So that really aids the risk off argument that's what we saw last week. That's what we've seen more of this week. We may have really started to see it a few weeks ago, and you just couldn't tell yet because there wasn't enough damage done. But there's definitely been damage done to the market. A lot of things that I think were due to pull back have the former leadership, as we noted, SMH, which is very similar to the XLK chart over here, that pulled back. XLC, which had been really just almost impervious, it finally showed up there. And we have to note that our canaries in the coal mine that we've been looking at with IWM and XTN, the transports were not really buying this whole story that everything was wonderful, inflation was under control, and the economy was rip roaring, and that the employment situation was wonderful as well. And that's the second year in a row that I think those two canaries have called the bull story into question, and they've been right in each case, it turns out, as far as I can tell. But that's the kind of things I would draw from here. Another thing I would draw from here is that some sectors are already oversold. And so this XLY, XLC is getting into, these are, XLY, XLK, these are already oversold. Other things are XLRE is XLV, another one defensive one. That was already having a rough time of it, but this week it's kind of held steady, just stayed really close to really being oversold. But a lot of things are really now in the 30s, and when some things are already below 30, some things are in the 30s, or most things are in the 30s. What I would say at this point is that, much like macro measure, I think a legitimate balance can form from here. In other words, why are you calling it legitimate? I'm saying that there's enough damage that's been done that I think it's reasonable to say, yeah, it's probably a time where a bounce could develop, not just sort of out of the blue for no reason. Of course, they can develop at any time, but in my mind, it would be legitimate to maybe bounce from here. I don't think it's gotten catastrophic yet. I don't think the damage is sort of a bombed out market where we were calling it a bombed out market a week or two before it bottomed in the fall. I can't remember, but we were just noting that. Didn't mean it had to lift right away. It just means that there was a ton of damage done. It really wasn't going down at the rate that it was. And they were starting to show some signs they might be trying to do something, right? So it just always starts out little slight and then picks up steam. And that's what happened. And ever since then, it was up, up, up and away until the last 3 weeks or so. So that's where we'll leave off with kind of this big picture sector discussion. Things that had me scratching my head for the longest time, like XLRE, that we had a bear play in there. And I think IYR maybe. Other things like these were kind of impervious, like XLB and XLI, and I'm trying to figure out how that's happening myself. But again, we don't trade off of like our gut, like, well, that can't be right. We trade off of the charts. That's why we do this, every weekend, and we do this all week long, as a matter of fact. But this is what we publish. So anyway, let's get into a look at some things, and then let me just answer this fella on my phone quickly. Let's take a look. I'll move this over for us so I can follow along, but I'll try to just show some levels up close. So I think if you want to look, I'm going to jump around with a couple thoughts to share in this kind of new format, and that's going to be it, basically, right? Because that's what apparently most people want. They don't want me trying to share all these what I think are finer points, maybe that don't come across that way. So here's 23.6 on XLE, right? And you got there, and now it's trying to sort of reclaim that 20-day there in light blue. Remember, these short-term SMAs are now going to potentially act as resistance. And that's what starts making it harder because people react to these things. And so when you do start declining below them, then they often will tamp things down. They'll keep things tamped down just the way they support things on the way up. You can see the 10 in white. We touched that a few times and held. The 20 came in at one point down in here, and that mattered at one point, and it mattered here. It seemed to matter there when it jumped above it. So that is where we are in terms of the retracement and what they're trying to do today. So if you do see a bounce, I would keep XLE and XLF on the radar. Now, these are probably not the greatest traders in terms of the ETFs themselves, right? I think the liquidity in the options is fine, and they do, of course, move. It's just that, right, you should probably try to find individual names that are going to give you better performance, like outperformance versus that ETF. But the same thing's happening. So both of those, right, on another really rough session for the market overall, with SMH down 4.5%, with the SPYs down another 1%, even though they're off the lows, and the Qs down over another 2%, even though they're off the lows. These sectors are trying to perk up. And so you might be able to keep an eye on those and say, okay, maybe they start getting back into the game sooner, and they've been showing a little bit of strength today in a weak market. Maybe they start doing something. So those are worth the mention, but you can see clearly that both of them have a very similar profile where they were relentless for a while, then they broke down, and now you've got all the shorties there. So taking a long side trade here is counter to the short-term trend. It's probably maybe even getting close to being counter to the intermediate term trend, but that's more of a toss-up. The long-term trend is still up, though. So the damage that's done here is pretty run-of-the-mill. If you're a bull and you like to trade long waves and you always get a 23.6% retracement, you'll take that every time, because that's the good sign of a healthy and still bullishly interpreted pullback, right? It's relatively shallow pullback. So that's still looking interesting, but it's got to fight its way up and through. if they do go full risk off and they show no mercy to even energy stocks, then that could be a problem, right? But you've got to keep your eye on those SMAs. You did break down. They might try to reclaim them and see if they can hold them. But those two are interesting in the sense that if you want to get into something showing you something already, those are the two I think to look at the moment, along with Excel, along with what was the other one? Oh no, you know what? I just lost track of the other one. I'll have to come back in my memory and try to remember where I was. XLK, you can see that's right at the 38.2, right? So you got the 150 coming in Rust right underneath here. So again, pretty steep decline at this point. You've got a 29 RSI reading on the daily. So you've got to think that it's coming into where they could try to put some bounce together. If they do gap things down on Monday and you see them gap them near key support levels, and then things really don't get much worse in the first 30 minutes to an hour, it could be, right, the old gap and buy where they just clean people out that decide to panic on Monday morning and then put a nice little rip together. And so if that were to happen, you'd have to think that where that rips to, that big number there is the 100 if they can muster it. But all these are going to start rolling over, including the 50, and we'll be waiting for it. Note that it almost completely closed this gap. I think it may have 192 and 192.04. So if you're going to wait over 4 cents all the way through Monday, you're not on the same page that I am. I would say, look, that's pretty much closed that gap, and it's right at 38.2. I'm going to, at the very least, overroll, if not completely close out, right? It depends on how bearish you really are, but just keep that in mind. I do think that's maybe getting close to where they're going to try to put a bounce together off of some form of support. Again, weekend news, that's the wild card. We don't know, and I'm recording this without that over the weekend development. So you've got to, obviously that could change everything completely, but you can see there's big time support here near the 23.6. It got to within a whisker of 23.6 on XLC, right? No signs of really it reversing yet. It's still hanging pretty tough, but you've got your shorties rolling over. Clearly the 50-day right above, which it now tapped from the underside today and wasn't able to get above and got rejected and is now really sent packing. There could be, though, right, with the last few minutes here, there could be some short covering, people that have been short today, the last couple of days for the week. So you could see things sort of close off the lows because people caught the ride and they're happy with it and they're just reducing risk as they go to get into the weekend. Again, XLRE, let's jump to that one. This one's been pretty solid as a trade on the downside for us. Nothing spectacular. It's not a big mover. I think I mentioned that before, but we did have paper in there. There were reasons not to like it. Put it in, it broke down, but that's all we got. It was already weak, so I think because it had already sort of struggled more than other areas, it didn't really, in the second half of this week, plunge even more, but it's got the potential to. Right, there's a gap right there. I don't pay attention to gaps after 5 days post gap, and unless there's on the return journey, when I mean like they're looking scenario wise like they could actually go back and revisit that under certain circumstances or market conditions, and there's a very big gap there, and so it's right also near another retracement level too, just above there. So to me, that would be the natural next level to look for on the downside if we stay with risk off. The reason why this thing might, I don't know, there could be news about commercial or what have you. It could be all kinds of news problems, but one thing that would be obvious would be if the yields start to spike again. So, and with there being a 57% chance, last I looked about an hour and so ago, of sitting tight all the way through the July meeting, in other words, staying where we are, that's not really what real estate people want to hear. XLV. And that's, by the way, there's a case just like with, I should jump to XLHB for us, but that's just another case of where you've got to wait for the charts to really pick your battles, right? Because you could have said that well, rates really aren't helping at all for the longest time, and you'd be right, but it didn't matter. It didn't matter and didn't matter until they decided it mattered. But you can see XHB. I don't think we have anything on in there. I did try to get stuff in where I could, just knowing that the charts were sort of looking a little more vulnerable than they had been in a while, and that rates maybe were moving up. And we did get some paper, and I think that might have been the IYR that more so than XHB. I do know we had a couple bear ideas, but I don't know if they're still active. But you can see they're all acting similarly on the charts, and it's getting down there in IYR in terms of oversold, and it didn't really have a bad second half of the week. So XLV, this is another one that can be defensive, but it really was such a performer from the lows all the way into March, right? It was just barely off the highs there in March, late March, at the end of the quarter, and it's been curtains for it ever since. And that's really a lot of damage, right? But it's really clung to the 38.2% retracement level like a champ for the last, literally, we've been right around there for six sessions in a row. So it just gives you an idea how important some levels can be at times. But what can you say about that? It's basically oversold. Another area that could catch a little bit of a bid because it is showing a little strength versus others. But I think that's because it was already hurt well before a lot of other things fell apart to the extent that they did. So I would kind of put it in that category, and that's not a terrible retracement, but you should trade against this week's low there in my book. You make a new low, it's probably on its way back down towards the 200, and where the 250% retracement dovetail near 135, 136. Obviously not a big mover, but we do keep an eye on it. It can be at times a really good trader, at least names within it can be. Staples, again, we'll note that there was a bid here. It's obviously doing well. It's trying to work its way back up. And, this is how things can shift. It's very close to being above all the SMAs again. Now, you do have declining SMAs that are making that possible, and that's not quite as good as flat ones typically, or getting back above when they're in an uptrend is even better, clearly. But if you could get back above there and hold, that would be a good starting point. But that's another one, though, that if they do start to rally the market, you have to wonder if more capital will rotate out of that. So that would be sort of another thought about it. If you think they keep getting defensive, maybe this thing keeps getting a little bit of a bid. But again, you're not really looking at that as a trader. I think you're looking at names within there to do something. But it's worth keeping an eye on for the defensive positioning and rotation. XLY, you can see, right, this is another one that the discretionary, this finally had the wheels come off. It was really hanging in there like a champ all the way until the end of the first quarter. Window dressing, excuse me, I didn't mean that, but no, you know what I'm getting at. And then suddenly all these problems develop. But we were wondering, how are they doing this? We had to concede that there was a cup and handle. Who knows what's possible? So you just never know that they're going to put a squeeze together against all things logical. But they were not able to. They couldn't take the highs out, and it's then sort of lower highs, double topped, whatever you want to call it, then rolled over. And again, the phenomenon of the former support levels in the form of SMAs struggling, right? The price action struggling at those, and then respecting them on the downside, acting as resistance and rolling over further. But look, that thing's gotten pretty beat up. It's below 30 already. It's sort of between in a no man's land. I do think there could be a little bit of a flat line near about 168.58, call it 158.60 ballpark, 168.50. But then you're looking at the next level down is the 50% there. Do note that there's a gap there, though. Another one down here that might take you to the next level down if the wheels really come off and you get even more an intensification of the risk off factor. Where are we? Oh, XTN, one of my favorites. And I did cover this in macro measure. I would go to JBHT and I would go check out some of the stories surrounding their EPS release and the poor week that it had and the maybe fallout for the future. I think that does not portend good things. I think the economy's softer than it's been made out. I think the jobs are not nearly as good as they've said that they are. I do think there's been a lot of chicanery, and I do think those chickens will come home to roost at some point. This is close to a gap fill. Um, you've got to respect the fact that they had a candle that closed above the high. I'm sorry, closed above the open. Maybe they try to take these highs out from the middle of the week and then pop back up to the 200, but you'll have a lot of declining SMAs. So I'm looking at a lot of these sectors, and I'm looking at the market major index ETFs overall and saying that I still think there's more to this as of right now. I don't think that they're just going to abruptly pull out of this tailspin and it'll be up, up and away. I could be dead wrong, of course, but I just don't have that sense the way these charts are unfolding. This looks like something that is too orderly right now, and there's not enough panic and shakeout. It doesn't always have to be that way, but usually before you get a really great tradable low like this one, right, then you get some kind of phase like that. And this just has been slow and orderly in a lot of ways on the way down. But I just think, look, this is one of our canaries in the coal mine. This is not acting well. Not only is this not even near this high, but you have to think about it's way off of highs. The market ran virtually without it, and it hasn't been able to do anything in the longest time. It's way off the highest high, like a lot of things have surpassed, right? Their highest high. It's way off of that. That's not even inflation adjusted. So this to me is just not a good situation, especially with all the products, moving through this economy ways they haven't before. It's become what it's become, right? You order something, and even sometimes hours later, there's shipping involved to get it to your door. Here's building XHB, not building, basic materials, excuse me. And another curious one, 23.6 retracement dovetails with the 50 SMA in gold. It holds tough there. Don't know. Again, I was a little perplexed at how this stuff was rising, other than inflation helping it to rise. I'm not so sure about global demand for all this stuff, but it is what it is. And I can't really speak to the weights of this particular ETF. But the next level down is very clear because of the hesitation, right? The respecting of that level with the price action back in Feb, the 100-day right there rising into that 38.2% retracement there. So I would say, look, that's your next big level if this week's lows break down. This is not a good counter move to this kind of impulsive move, right? You really want to see a little more bullish attempt here to try to lift things back up. This has been very weak so far. You have to look at it that way and say, it's impressive that it held, and it is, and that could create more of a bounce. But to this point, if they start rolling over and taking the lows out, right, and you've got those yields climbing again, things like that, this is not really all that impressive. And I would think it would, under those circumstances, it would drop at least in my book to here. I think more than likely it winds up down here. So there's a lot more. There's a whole nother leg of ugliness waiting for this if this is all it can do, right? So, but that's the difference between, right, if it's all you can do. You need more data to know, because it might try to do something on Monday or Tuesday that's it makes it look a lot better. If it doesn't, just keeps rolling over, I think you may as well, I'd be kind of like a patient roller as long as the market keeps looking rough, because I think it would be odds on that it makes it at least to there. And then if it can't hold there, it's odds on probably to get down to that next level right there. Like I said, which again, visually it's big, but in dollar terms, it's not. It's just not, these are not big movers. That's not the reason we use them. You can still trade them, and at times they are pretty good traders. You can get, all the options prices are relative to that, so it all makes sense. But look, breakdown, close near the lows on XLI. You're not even at 23.6. Shorties, SMAs rolling over, gaps down here. I don't know how you can like the look of that. The only good thing we can say about it is it's in the mid 30s on RSI, but it tapped, right? It really tapped from the underside on what could have been support, did act as support for a few sessions, tried to get back above, failed, tried to get back above, failed, tried to get back above, failed. So this is not looking good right now. I think I do think this market needs news, positive news in a desperate way to try to create some kind of a bounce. The bounce, a decent bounce is definitely in the cards in my book this upcoming week. But I don't know what would be the impetus for that. It has to be something that has to be some good news somewhere that comes along that starts to generate that. Now, I say that, of course, the gang doesn't need news to do anything, but I mean, there's usually a good cover story for whatever. They usually have a decent story for whatever they want to do. Very close here to closing. I guess it did close the gap. We all know this is just that sort of cursory look at XLU, but it's not a surprise with the market acting the way that it did and rates sort of chilling out for the week, that this acted like the defensive sector that it is, kind of confirming the risk off, like we said earlier. We looked at housing. Let's look at XAU. This has been a great source of interest. And we've had a lot of paper and we did really well. And we were ignoring this for the longest time, but we have talked about the big picture potential here. Did get the pullback. It's trying to go. You can see that it's struggling right now below this upper Bollinger right there in the dotted red. There is sort of a mini flat line now forming near this level that it closed at. But right, this is obviously its own thing. A lot of things can drive this, and this can get crazy at times. It's also very rigged, but at times. But this is interesting because you have the potential for a high or low rollover from here, right? I mean, low or high rollover where you had the high, you failed, you took out a lot of stuff, then you try a bounce, and now if this rolls over, right, that's rough stuff for this. On the flip side, it's holding above everything right now. Even the 10-day, I think it got back above ever so slightly. So right now, it kind of looks interesting. It doesn't really want to give it up. It's not. This was sort of one of those ramp jobs where they just overdid everything. So it got out a little bit ahead of itself because it was already overbought at that point. And I was glad that some paper came in that we could sort of make a note of that in some of our updates. But it got a little crazy. I passed on a lot of ostensibly bullish paper there in terms of adding new ideas just because I felt like it had this potential. I didn't know at the start of that session that it would reverse this strongly, but I was just really reluctant. I felt like there just kind of had a spider sense thing going on, and luckily that kind of worked out. But right now the trend is still there. You have to just see what happens, and I think it breaking down probably below Thursday's low is big, and then probably it overcoming Monday's open. Gets back above Monday's open at 137. You could start saying, okay, it's trying again. But if it takes out Thursday's load in my book, that's the level 134.36 that I would say, okay, this thing might be on its way to the 20-day for starters, and then even further down again, from there. Trying to think if there's anything else. I think we usually cover DXY, and there's just not much to report here. You'll see, kind of like muddled through the week. So that's not great in my book, that the market kind of struggled with TNX doing what and the dollar doing what they did, right? Like you would say, well, they kind of hesitated. Why'd the market? But I just think it was the recognition that we've been waiting for, that we kind of were at odds with, and it just really wasn't. We weren't buying the story too much, and it just didn't materialize the way that the propaganda was trying to sell us on. And the VIX was interesting too, where it did, ultimately pop, but that even leaves you guessing, right? Because that's really a weak finish. Now, weak finishes on a Friday from the VIX are nothing new, but that's really curious as to how bad this thing got wrecked from the highs. Now, I think a lot of that could have been early on, when some of the war type news was breaking in the Middle East. But that might account for that more so than anything. But look, it's still kind of hanging on to its uptrending characteristics. You can't really chart the VIX in my book the way you do a typical equity or equity ETF, but it does have little things we can draw from time to time. And I think just that it hung in there relatively well at somewhat of an elevated level is a big deal. So I still think the risk is clearly still out in this market. And if you don't get good news that they can try to put a bounce together from, and these rates start to work their way higher, if you start to get TNX working its way higher, I think you've got to be really concerned about that. This whole rate thing could really persist longer, and that is really going to undercut things because I don't think things are all that wonderful right now, and I think that could really derail this bullish start to the year even more so. That's my take on it. Now, I still allow that there could be some really bullish stuff. Usually, this fourth year is the second best year of the presidential election cycle. And usually, after you have a little bit of messiness in April and May, things usually get a little bit better. Then they get rough again, then they get better again. So you kind of get rough as you approach the election, I think, from like Ock into Nov. And then once you're past that election after maybe a week or two, then they start to do the run and gun into year end, typically, which is in most years. But right now, we still, in my book, we're still kind of in a 5-week window where if it were to stay generally rough, it would sort of make sense and be in accord with that presidential cycle behavior during these months. So for that reason is another reason to be careful. I think that is about it. I'm not going to go too much into like wood and cut, something we look at. I don't really want to get into the oil future so much right now. I think that's kind of covered by what the XLE is doing. I think excuse me, let's see if it comes up. It kind of looks right, somewhat similar to it. We'll see what they're able to do, if they're able to use this level as a place to bounce from. But the only other thing I could think of would be we have looked at other things, but I will maybe end on the big picture stuff for gold and silver, and we'll wrap it up on that. I think I'll maybe just end on, you can see, right, this is very interesting. The copper is staying bid like that. That's a very interesting development right there to me. But let's look at you know what, I think I'll just look at GLD. I think it's the easiest way to do it. But this is something, if you're new and you don't really watch Sector Situation, we've been talking about this for a long time. And it just to me, very concerning, because I don't know why I have this respect for patterns. And I do think the cup and handle pattern is a good pattern. And it's got this, multi-year, I mean, it's over 13 years worth of tracing out this cup and handle, and it's firing. And if this were to fire, and you could start projecting from it, it's a pretty big firing, right? It probably carries gold into the $3,000 an ounce type situation, if that were to really fire. And these patterns to me are pretty reliable, and so that to me is concerning, right? Because why would gold, why would silver be trailing it there? Why would the other metals, like, why would this be happening? So I don't think it's it could be obviously due to inflation partially, but that kind of forecast, that kind of move that could be made, that usually means rough stuff is unfolding in some way. Maybe multiple rough stuff type scenarios are playing out simultaneously. That's not what we want. So just keep an eye on that. It could be a good trader. We ignored it as long as we could. And then when the paper and the charts started syncing up, we started getting involved, and it's been pretty good. And we were lucky enough to sidestep the pullback. But if they start coming in again and the charts keep looking good and it recovers, we'll get ready to go again, because I think I like to stay in line with the big picture. And if the paper and the charts in the short term are confirming the big picture, for me, like, it really doesn't get much better than that. So unless you have cheap volatile play on top of it. But on that note, I'm going to end this week's Sector Situation. I want to thank everyone for joining us. I do hope you got something out of it that they can help you out this week or some week in the future. Again, thanks for tuning in, and we'll probably try to keep this kind of a format more and more as we go by. Thank you.